Good evening, good evening, good evening. Let's get right into it. Welcome, everyone, to another great financial topic for our community, our Totally Lit Forum. We are excited to bring this information to our community. Super excited, and I'm going to share my screen so we can jump right into it. Let's move a couple of things around, and let's see here. Okay, let me do it this way. I'm a little out of my studio, so um, I have to move things around so I can figure out where I am. All right, here we go. Now I'm sharing. Y'all can see me. Great. Excellent. So let's get right into it. And today's topic is, we've got a nice long series going on putting your money to work, right? Put your money to work. This is part four, and this is the C part of part four. Next week we'll be into part five. But right now we're gonna be talking about investments, the basics of investments. And my host, Dr. Hurd, thank you for that introduction. Very kind. And uh, and I'm going to get right into it so we can give this information to all that want. So, what is investment? And what is investing, right? Investing is the process of putting money into assets with the expectation of generating a return over time. You know, when I look up this definition, it's a great definition. However, a lot of people I run into, they want to eliminate this time part. They just want to, they don't want it over time. They want it right now. And I guess that'd be a different kind of investment. That'd be like the Vegas type of investment. But when you talk about investment or investing, most people understand that you want to put your money to work, put an asset to work so that you can generate a return over time. It's unlike saving. Um, Investing involves risk, but offers higher potential rewards. So, savings is one thing, investing is the other thing. I usually tell people you want to save for retirement. Saving for retirement is important, but you also want to invest to have a chance at a better life. Investing gives you hope, gives you a chance. And the thing about it is, if you can, if you can get it done just right, then it'll be great to be awesome. But the risk factor is always there. Okay. So why is investing important? Investing is important because you want to create wealth, right? Uh, and not just wealth for now, but you can create enough wealth that you can pass on for generations. And that's something that's very important. Retirement, you want to save for retirement. And the reason I say you save for retirement and you invest for a chance at a better life is because if we remember the pandemic, many people, many businesses closed during the pandemic. All right. So business is a type of investment. And the only thing with that is that many people's retirement plan was I'm going to work hard and build my business, then I'll sell it for a few $1 million and I'll be able to retire. Well, what happened to those thousands of businesses that closed during the pandemic? What happened to that retirement plan? If your business was one that you've been working for 15 or 20 years and now it closed because of the pandemic, what if you did not save for retirement? What is your retirement plan now? And so to me, retirement is a matter of saving. It's a matter of having the money you need that it can sustain your living without you having to work for it anymore. I like to call it redirection because many people work way beyond what we know as retirement age. And the fact is, you don't have to ever stop working, but that doesn't mean you have to always work for someone else, right? So you can work on projects for yourself. But anyway, investing. You know, you have a chance to um, choose the type of life you want. And if you set your investment up right, your returns are right, then you can choose maybe to live in the Riviera, or you can choose to live in the country or the city, but money no longer controls you. So those are some of the important things about investing. Types of investment. When we look at types of investment, we're going to look at like stocks and bonds. And when you look at stocks and bonds or equities, the stocks is a matter of having ownership in a company. You becoming like a part owner in the company. And the thing about that is you have a high risk, but a lot of times you have a very high return. Okay. When you talk about bonds, investing in bonds, it's usually a fixed income situation, right? And it's kind of like a loan to a company or to the government, you know, but you already know what the interest is going to be on that bond. And so it's something that you put together and you already decide it's going to be long term, but it's very low risk for the most part, but it's give you stable returns. And many people enjoy stable returns. All right. Mutual funds, uh, EFTs, we're talking about pools of stocks and bonds managed by professionals. And so a lot of times you put your money into mutual funds, you've got professional people that are managing this. For the most part, your returns are pretty good, right? So the thing about that too is that a lot of these pools of funds like this, they're diversified. So if one doesn't do too good, then the other one can kind of make up the difference. Real estate, many people like buying property for investment, property to rent or to sell. And real estate is great. It's a good investment for the most part. Now, like everything else, it has its ups and downs. And sometimes, if the market drops, if the value drops, then it's difficult to get your money out of it or to get a return. But for the most part, there's usually a steady increase in value in real estate. Most of us remember 2007 when the market dropped because of the homeowners or the housing market collapse. And that's what happens when people get too ambitious, try to push something too fast, inflated the value, and then it didn't hold. Now you deal with the risk of investing, right? So when you look at commodities like gold or oil, and all these things have usually hold their value, but they still do go up and down. I remember working in the oil industry, working with an oil company in the early 80s. And I remember being a part of 3,000 people being laid off. And that's just the company I was with. There are several other companies that had to do the same thing. Why? Because the market dropped, the demand dropped, and so companies had to cut back. Cryptocurrency, many people love cryptocurrency and they like the great potential to earn. But if you're not, it's a highly volatile market. And so if you're kind of jumpy and you want to jump in and out, that may not be the market for you. But cryptocurrency is you got to believe in it. You got to put your money in it. You got to let it ride and have what do you call it, nerves of steel. But everything once again has its risk. I usually spell investment RISK. So you got to look at the risk versus the returns, all right? The risk versus the return. Higher risk could mean higher potential of returns, but it could also mean higher potential of loss. So when you talk about risk, you talk about type of risk. You talk about market risk, credit risk, inflation risk, liquidity risk. These are common things to investors. And many times when you are new to the investment world, then a lot of errors are committed because of not properly planning for these kinds of things. So, it's important to get as much information as one possibly can to make sure we, plan properly. A lot of businesses deal with liquidity risk. Many businesses every year, like in farming, like in many other companies, retail, and so on, they borrow money every year to do what they have to do and in hopes of making it all back and so on and so forth. So, this is a normal thing that happens in business all the time. Okay. But you've got to know and be educated and be, like I said, sometimes you have to have nerves of steel because you have to balance that risk versus return. All right. Diversification helps a lot with that. If you're diversified in your investment and one of your investments are kind of down, but the other one is okay, it kind of helps you to maintain sanity. So that's why many people say diversification is the name of the game. I know a very wealthy gentleman that says you can't put all your eggs in one basket, but you got to watch that basket very closely and all the time. So hey, that's just it's a personal thing how you feel about dealing with the risk versus the return. All right. Investment strategies. You have long-term strategies. You have dollar cost averaging strategies, and you have growth versus value investing. So your long-term strategy is you're going to buy and you're going to hold, right? You're going to invest in the company. You believe in the company's vision. And so, like, there are a lot of Fortune 500 companies that have been around for a long time. People invest money with those companies, buy their stocks, and they hold it because they expect to make dividends or they expect it to grow over a period of time. And so that's long-term investing. Then you have what they call dollar cost averaging. So some people decide, listen, I'm going to invest X amount of dollars every month. I'm not even going to worry about it. I'm going to do this for 20 years or 30 years or whatever. And that's another good way of investing.
Hey, real
Other
quick, you
people
ordered
look at growth
your Ring
versus
doorbells from Amazon.
value investing, right?
Your
And
Ring
so
doorbells.
every program, every process
You
is
didn't.
is going to be based on your personality, right? It's all based on your personality, and you've got to learn as much of you as you can about the program or the concept that you're invested in, and then you know set yourself on your track so you can make it happen. All right, let's go to the next slide here. In getting started, these are some of the basic things about getting started. You want to set clear goals, right? And what is retirement, buying a home, financial freedom, whatever it is you want, set clear goals so you know where you're going. It's funny, I talk to people all the time about retirement, and I ask them, hey, if when when down the road when you retire, if your home is paid for and your cars are paid for, how much money would you like to live on? The number one answer I get is, I don't know. And it's funny how people would get on a journey, especially a long-term journey, without knowing what the destination is. So if you set clear goals, it'll definitely help you to achieve them quicker, but it'll guide the decisions you make. Understand your risk tolerance. You got to know if you're conservative, if you're moderate, if you're aggressive, right? You just got to know. If you are a uh, uh, speedster, you like to drive a fast car. If you are a defensive driver, you like a nice SUV, you like all your protective features around it, you're aggressive. You have to know that. And then that's how you're going to look at your investment. You don't want to get into something that's highly volatile if you are very conservative. Start with a budget. only invest what you can afford to lose. That sentence right there helped me to understand, like I've been telling people for the longest time, the way you spell investment is RISK. If you're only going to invest what you can afford to lose, then you must know that there is always a risk. It really makes me mad when I hear people telling other people, this is so great, you're going to make all this money, everything is going to be great. So I'm an optimist also, and it's great to be, you know, be optimistic. But come on, there's just you have to have respect for the investment process, and the fact that the thing about it is one thing that you don't get back is the time that you put into investing into anything. If you lose money, you can usually earn or get money back. But the time that you put in, you don't get back. So if you invest in something long term, put a lot of time into it, but you don't know where you're going and get as much information up front, you may not have the time to make that money back. So you definitely want to start with a budget, only investment you can afford to lose. All right, choose the right investment accounts, whether it's brokerage accounts, retirement accounts, 401ks, IRAs, annuities, life insurance programs. There are many programs that you could put money in to grow money. And I said life insurance, but that is not an investment. That is a program that offers protection, but it can also offer a place to grow money or to save money. All right. And do your research. Get professional help. Get as much help as you can. Financial advisor or use investments apps or get help, ask questions. In the carpentry business, they say measure twice and cut once. If you don't measure good, you may waste a lot of material by cutting 4 or 5 times. So get information. All right. Okay. Where did my cursor go? Here we go. All right. So when it comes to growing your money and investments, if you're going to put money into something, especially in the market, you want to know, is my money in a fixed situation? Is it going to be in a variable situation, or is it going to be in an index situation? And a fixed means this is what you're going to get, and that's it. A variable is what's happening in the market. It's up, it's down, it's all around, right? And so when it's up, you gain, you make money. When it's down, you lose money, right? Now you also have an index process, whereas it's not directly in the market. You're using one of the large indexes that says, I can put my money here. These professionals going to manage my money. When the market is up, we earn good interest. But when the market drops, I'm not participating in that. I'll wait, my money stays. And when the market comes back up, let's make money again. And so if you're going to invest in stocks or bonds, or you're going to put your money in different programs like a 401k or annuities and so on, you may want to check what environment they're operating in. Okay. All righty. So come on, slide. There we go. Common mistakes when people are investing. They invest without research. They're trying to time the market, they're ignoring diversification. They're letting their emotions drive their decisions. And they're not reviewing their investments on a regular basis. It's funny, but whenever there's a crisis, whenever the market is down, I would talk to people that are investing in different programs, or 401k or so on. And I said, now, how much money did you lose this year? They say, I don't know. That's not good. You should know. You should be reviewing your investments, or you're reviewing your money on at least a yearly or a bi-yearly or quarterly basis. You've got to know what's going on with your money. Okay. So those are some things to look out for. All right. Come on, slide. I'm kind of all right. Here we go. There's some other things that I like to call investments also. You want to invest in self also. Think about that. Some people go back to school at a later date. Some people take classes to expand their knowledge on different things. Hey, invest in a college or a trade school fund for a child or other family member. You could put away some money. So this money, I'm going to use it to invest in humanity. Invest in, if I see someone with great potential, but they just need a little push, I want to invest in them. I think that's a great investment. Supporting your local community businesses, um, I look at that as an investment also. Your churches, your community civic organization, I call those things investment, and I think they're very worthy uh, of our time and money. All right. So come on. There we go. So listen, that's my time for this evening. I thank you for allowing us to share this information. OIC 10K is committed to assisting and building our community by sharing these financial nuggets and financial information free of charge. We don't ask people to register, to sign up, to give your email address. We just want people to learn because we believe an educated community is going to be a stronger community. It's going to be a wealthy community. So we look forward to seeing you guys again very soon. And every Tuesday and Thursday, we'll be right here doing this. So